Good afternoon, everybody, and thank you for making it here right after lunch. My name is Naveen Suri, and I'm going to be your moderator. And I must start by admitting that until about 2 years ago, I had no idea what financial inclusion meant. I've been a banker all my life, asset manager, managing billions and maybe more than that, but never really looked at financial inclusion as an opportunity. 2 years ago, I got associated with a program that Prime Minister Modi and DPM Thurman launched earlier today, which is the Apex platform, which is an incredible opportunity for financial inclusion to become what it should for population of people which are underbanked, unbanked. And as I started digging into this topic, through the last 2 years, having traveled to Cambodia, Vietnam, Philippines, all of these markets in ASEAN, one of the things that started to become clear was that the opportunity was just tremendous. It's just huge. And the panel that we have today here is made up of regulators, FinTechs, and payment companies. And that would mean that we have on the panel the entire breadth of people, participants that can make financial inclusion achieve what it's meant to. I do want to start with just a couple of slides, and the couple means literally couple. This first slide that you see here talks about what infrastructure means to financial inclusion. If there is mobile phones, which obviously needs telecom infrastructure, if there is internet, the opportunity for businesses to bring into the mainstream people who are currently not touched by the finance world, the formal world that all of us live in, is just huge. I wanted to then dive a little bit deeper and think through, and some of these stats are likely known to you. There are 1.7 billion people around the world, adults, who are unbanked. And ASEAN, if you were to add India and China to that, is likely to be maybe 70, 80% of those numbers. So the opportunity is right here in our own backyard. 1.1 billion of these people have mobile phones already. There are, in the last 4 to 5 years, over 500 million people who have come into the formal financial world system. And this has not necessarily been through banks. This has been through mobile phones, and our panel is going to talk a little bit about that. There are MSMEs, micro and small and medium enterprises who are also now beginning to come into the main fold, but not necessarily to deposit money, but to borrow money. So financial inclusion covers both sides of a traditional bank's balance sheet, which is borrow and lend. There are enough estimates around in the world from the IMF, from the World Bank, talking about the impact bringing these people into the mainstream is likely to have on the GDP of those markets. You can pick a number. At the lower end, it's 14%. At the top end, it's 30, so let's go with 14. The opportunity for banks out of bringing these people who are underbanked and unbanked, MSMEs, into the main fold is to the order of $200 billion. And that's just huge. So without further ado, let me please welcome our panel who've flown in from Vietnam, Myanmar, Cambodia, and Philippines, Indonesia as well. Yeah. So I think we should just use the mics here. I think we should take 30 seconds and we can just start from here and do a round of introductions.
Anthony Thomas, CEO of Mint in the Philippines, which is the fintech arm of Globe Telecom, Ayala Corporation, and Ant Financial from China.
So Brad Jones, CEO of Wave Money in Myanmar, which is a joint venture between Telenor Group, Yoma Strategic, Yoma Bank, and First Myanmar Investments. We're a fintech payments operation with 36,000 agents throughout Myanmar.
I'm Sirai Chia, General Director of the National Bank of Cambodia. I'm also on the Southeast Asia Advisory Council for Women World Banking and Chairperson of Cambodia Credit Bureau, which is the only private-owned credit bureau in Cambodia.
My name is Erwin Haryono. I'm heading now the FinTech office in Bank Indonesia, the central bank. I just joined like 5 months ago. And then the first question
we should not ask you tough questions.
the first time come up to me when I had this fintech office. Why me? It's so old for the fintech office. So I'm trying to use my blue chips now.
Okay, great. Well, as you can see, it's an incredible panel made up of regulators and new and young companies, including payments. So, Anthony, maybe let's start with you. One of the things that I read in a report, and I'll read this out, it's so true, is that telecom services is the hardware necessary for driving financial inclusion. Now, take a pause and just think about it, that how do you use telecoms to drive financial inclusion? And I know that one of your investors is Globe Telecom, which happens to be the largest telecom in Philippines. And you are a fintech which is offering payments, right? And so how has having a telco inside you helped you achieve your goals as a business as well as drive financial inclusion?
Thanks, Naveen. That's being a part of the Globe family has really helped in several ways. One, of course, is access to their large 65 million consumer base, particularly relevant because in the Philippines, 2 out of 3 people do not have access to a bank account, and about a third of the districts, or barangays as we call it, which is across the archipelago, do not have a physical bank branch. So that's where access becomes particularly important. When it comes to network connectivity and affordability of data plans, again, we're able to help solve that. We make ourselves available on a zero-rated basis even when people do not have a data plan. And of course, the best experience is through an app, but if the smartphone isn't there, we also allow ourselves to be accessed through USSD. Beyond that, there's also physical infrastructure. So Globe has, in the ecosystem, 1 million small stores, sari-sari stores, which we use a small subset of today for distribution, for cash in, cash out. But beyond all of that, I think the fact that consumers trust the Globe brand and it resonates with the digital lifestyle is also important. Globe also has relationships with large enterprises and small businesses which help us with any payment disbursement or collections solutions, merchant acceptance. And then there's the larger Ayala conglomerate, which has malls, again with merchants, and has a bank within the family for cash in. And then there are partnerships. So if you think about it, Globe is a big partner of Facebook. Philippines is Facebook country in terms of not just the share of the population that's on that platform, but also the per capita time spent on it. So GCash is not only associated with Globe, but also Globe's partners, and GCash is now available on Facebook Messenger. And then there's Ant Financial, which is the other member of the JV, who have really helped accelerate our growth over the last 12 to 18 months with access to their platform and expertise in areas like risk management, which makes it a great set of ingredients to deliver financial inclusion in the country.
I clearly think you're blessed, right? You've got it made. Let me, on the question of infrastructure, Brad, given that here is a business which is using the mobile network, the infrastructure available to drive their business. In your market, there is also a network of agents, around Wave shops, and they are. What do they do, and how does that become part of infrastructure which can help drive financial inclusion?
I think one of the challenges in the Myanmar market is that the bank population is extremely small. And the country is very, very big. So it's, in addition to that, it's got the lowest road density of any country in ASEAN. And so when you put all these things together, it makes it very hard for the average person to be served in the financial system. So in the Myanmar market, there's about 55 million people. There's 3,000 ATMs and only 2,000 bank branches. With the cost of a bank branch, banks are never going to be able to reach the last mile in Myanmar, particularly when you look at the geographic density. So the agent really becomes that point of financial connection for the customer. So I think most people in the audience probably know about mobile money, but for those who don't, agents really just are the sari stores, the Myanmar equivalent. It's the mum and pop shops. They're selling Coca-Cola, they're selling top-up, they're selling noodles, these type of things. But we train them in how to actually do financial transactions as well. So they're taking deposits, basically. They're doing withdrawals. They're doing money transfer. And it's really enabling us to reach the very last mile in Myanmar. So we've now got 36,000 agents. We'll probably continue to roll that out to 45, 50,000. We're constantly looking to see actually whether it's too many, too few, and really the most important metric for that is actually agent profitability. The more money the agents are making, the more engaged they are in the service. Pleasingly, we've seen our agent profitability increasing month on month now for the last 2 years. So we've got a very liquid and a very engaged agent network. So the model is sort of working for us at the moment. So, but to answer your original question, I would say that they are the glue. They are if you have a good agent network in this particular business, then you have the right infrastructure to actually offer this service. If you don't have a good agent network, then the whole business model falls down.
And Anthony, would you agree with that view in your market in Philippines?
So we haven't been as reliant on the smaller sari stores. We use modern trade. So 7-Eleven is our biggest cash-in point in terms of physical distribution. But we've also been tapping other ways to get money into the wallet. What we've done is we've tied up with a large number of companies to disperse payroll. So we try and get to income sources. We do that also with remittance flows because, as you probably know, there's about $30 billion of money coming into the Philippines, and that's an income source. So we've tied up with MoneyGram, for example, to get the money direct into the wallet, or on a blockchain-based solution with Alipay Hong Kong, sending money into GCash. So we try and tap income sources, and now we're well integrated with the banks because we are part of the national retail payment system. So through InstaPay, you can actually instantly move money into the wallet. And we've also allowed sending money out. And in fact, that was a bold move where we did it for free. And in fact, we are the largest sender of money out to bank accounts across. So it was clearly a problem to be solved. So as long as you create enough flow, I think it's probably a more sustainable way to get to scale through banks and outside of banks through income sources.
Understood. If I may, just before we move on from that topic, what percentage of your business comes from the agent network versus what does it do for you?
So the agent network, I would say, is about a quarter of the cash in that's flowing. But that's it. The rest of it comes through income sources and a very small percentage through bank.
Got it. And Brad, what's it in Myanmar?
Yeah, I'll look at it a little bit differently. So we, just in terms of transaction numbers, so my business is divided into two P&Ls basically. So it's a distribution P&L and a digital P&L. So we count distribution effectively as every bit of revenue we're generating through the agent network, and digital is every bit of revenue we're generating through the app or through the customer wallet basically. So we're running at about 80% revenues coming through the distribution side of the business currently, with about 20 through the digital side. That's something we want to change. I think it's interesting to listen to Anthony talk about the Philippines and the multiple sources. Modern trade doesn't really exist as such in Myanmar yet. The banks are still quite rudimentary, but that will change over time. So I think we'll start to see Myanmar become a little bit more mature in the coming years, and then we'll start to sort of diversify some of these networks as well. But yeah.
Got it. I think let's move to another critical aspect of infrastructure, of financial inclusion, which is regulation and policy. And Madam Serai, there is clearly a lot of work that's happening in Cambodia, especially on the microfinance institutions, where the borrowings done by adults has just gone through the roof. And is there a role that regulation is playing and can play in driving financial inclusion?
Well, thank you, Naveen. Just now at the back at the speaker lounge, Naveen was encouraging us to speak up our mind. And you know that we as central bankers are usually very scripted people. So I have to put a disclaimer that whatever I say is my own views. If it's good, then it may coincide with my institution view. If it's bad, it's all me. So with regard to the role of policies and regulations, I think this is very important. And I hate to say this, when we talk about innovation, we think about technologies, but innovation doesn't have to be about technology. It can be about the mindset, changing the mindset. So regulations and the people behind the regulations is also very important. And we at the National Bank of Cambodia has always been taking a very progressive approach towards this. We are actually one of the first countries in the world to regulate the microfinance industry in the year 2000. And it was not very well taken by some multinational organizations, and some of them represented here. It's what you're a central bank. Your responsibility is financial stability. Why would you dedicate your already limited resources into supervising the microfinance? And to us, it was like, no, it's not about the value that was happening. It's also the volume, because there's a lot of people who transact with microfinance, and it has implications on social stability. So it wasn't just about financial stability, but it was also about social stability. So we embarked on it, and we did well, because since we regulated the microfinance, there were more confidence from investors to go into the industries, and the microfinance themselves has received a lot of investment from foreign funders, and with the money also came the know-how and the technology. Now, when we decided to regulate the microfinance, we have also taken this approach of a tier regulation. So microfinance are going to places where no conventional bank would be going. So do we want to impose that much regulatory burden on them? And we didn't. So we've decided that at a certain threshold, below a certain number of customers, below a certain number of outstanding loans, you can just do it on your own. Above that, you have to come to register with us. And by registrations, we're not going to impose anything on you, but we need you to report to us on a quarterly basis so that we know what you are doing, and that if there's something wrong, we're aware of it. And then the third tier is getting a license. So if you reach a certain threshold, you have to come and get the license from us. And there you have to follow prudential rules, reporting rules, etc. on a regular basis. The level of complexities of the rules that we impose on microfinance was completely different than the banks, so obviously more relaxed. So that's what we have taken on the microfinance. And as we move on regulating microfinance, which is just lending money, so for us it wasn't too risky because it's the money from the shareholders or whoever the investors who are giving out to these people. But we also realized that the people in the rural area, they don't just need lending. They don't just need the credit, but they also need a place to save. So in 2009, we issued these regulations on allowing eligible microfinance institutions, those have done well, those have a strong corporate governance, MIS system in place, to take deposit from the public. We've done that, and it was a very successful. The number of depositors in Cambodia now reached 6 million. We have a population of 16 million. And in terms of number of borrowers, we have 2.6 million. So obviously more depositors than lenders. It's just back to your question. The other approach that we have also embark on in terms of looking at regulations and so on was exactly when Brad was the first, that was 11 years ago, when Brad approached us with the concept of mobile money transfer, and that was a different company than what you're presenting now. And at that time, to us as regulators, it was just, what is this animal? What are you coming to us? Imagine 11 years ago. I'm still struggling to bring back confidence into the systems because we had a big restructuring program in the year 2000 where we closed 17 banks and some didn't couldn't afford to pay back to their depositors. There was a mass protest in front of the central bank and so on and so forth. Then somebody come to us and they said, we want to introduce this. And then, what are you telling me? And they said, well, we're going to take an open e-wallet for people and then allow them to transfer to the rural villages through the mobile. And I said, well, I don't know what that is, but as long as you take deposit, you are a bank, and I want to regulate you as a bank. But it was impossible. This is a small startup companies coming to tell this to us. And as a bank, you had to have a minimum capital requirement, comply all these rules and procedures. And mind you, the banking industry is the most regulated industry in the world, only behind the nuclear energy. So we thought, okay, but you know, from the rules, you're like a bank, you're taking money. But then, you know, I know that you're going to do good thing for the people for access to finance. So we come to this compromise where we said, well, I'm going to allow you to do this, but I need a bank to guarantee your operation because I don't know who you are. And if this bank know what you're doing, then it's good, let them do it. So we asked the bank actually to help us with overseeing this animal at that time. I don't know what that was. So a bank take on this project and they guarantee everything about the operations of this company, payment service provider. So they guarantee the governance, risk management, the KYC procedures, consumer protection, because to us there's 4 concerns when we look into it: safety of the money, safety of the messages, well, technology, the AML KYC is properly in place, and a customer protection mechanism. So these are the 4 things that we ask. I don't know what is your model, but do you have these 4 concern addressed? Then you're good to do it. And so as we do with under the bank models, the bank we're overseeing, we eventually realized that it can't go on this way because the bank eventually don't know what these people are doing. And so they got scared because there's a reputational cost and they're introducing new things that nobody knows what. And the bank will say, oh, yeah, it's good, but no, because we don't want to put our reputation on the line for this. And then for the payment service provider, they get frustrated. It's suffocating for them because every time they want to introduce new things, the banks who are guaranteeing their business will say no. And so there was this sort of disconnect between the two eventually as the company grow. So the Central National Bank of Cambodia has, I think the good thing is that we do a lot of listening and we accept free coffee from our regulators. Unlike many other central banks. Because I think dialogue is very important. So we talk, and then we've decided that we're going to set up a separate payment system department to oversee these payment service providers. So we did in 2013 set up this department, but in exchange, because now we're going to regulate them directly ourselves, we need to see some form of commitment. So before, they don't need to prove us anything. As long as the bank is willing to take on their businesses, or guarantee their business, they're good to go. Now, we'll say, since we're going to regulate you directly, we need to see some form of commitment. So they're required to have a minimum capital requirement. They're required to do some reportings and prudential rules, etc. The float of the e-wallet that they collect from their customer has to be deposited 100% with a commercial bank, a regulated commercial bank. They can't use it for intermediating because if you intermediate that money, then you'll become a bank and we have to regulate you as a bank. But because you deposit in the bank, so you're just a software or system provider. So these are some of the examples that we've managed to. Now we have 20 payment service provider, very booming payment industry, and some of them are here. Thank you for the support and being here, because we thought the room was empty initially.
No, but thanks very much for that, those 2 examples, but I'm not going to leave you there. I'm going to challenge you a little bit. Some of the research that I've read recently on Cambodia is that the regulation has certainly led the MFI infrastructure, the momentum to rapidly achieve its objectives. On the savings side, on the insurance side, it's still not as rapid. Is there a lesson that there is, or maybe it's early days, that savings is not driving as much, or am I wrong?
the big lesson learned is about education and literacy. But the challenge for us, it's not just about access to finance. It's not just about creating a means where people can access these financial services. What we face as a country who's have a very bitter history is to bring back the confidence into the system, is to tell people, please, save your money. Imagine, you know, in 1975, we have this Pol Pot regime. Within one day, the money is gone, and no modern history where the whole monetary system was abolished. Literally, they bring back the whole country to the barter system. So people have no trust in money. And then we've got the transitions in 92 where the local currency depreciated by 200%. And then we've got year 2000 where we have these banking restructurings and so on. So the issues for us is not just access, but to bring back confidence into the system and tell people that it's okay to save in a bank account. You don't have to always buy gold and hide it somewhere. You don't have to buy, you know, lands and properties. You can invest, you can save in a bank. So this is one major challenge that we face. And then it's about access, creating a way where people can reach out to this and so on and so forth. This again, it's savings and insurance. It's a very complex instrument and you need people to understand it. Borrowing money, it's easy because I'm taking money from the institution and I can use it. But when I put money into a bank or I buy an insurance policies, it requires more sort of working on it. So financial literacy is something that the bank has also embarked on. We launched our Let's Talk Money campaign, and we've now managed to convince our Ministry of Education to embed financial literacy into the general education program. So from now, children from grade 1 up to grade 12 will be able to learn about financial issues and savings, insurance, borrowings, etc.
So this Let's Talk Money is a campaign run by the National Bank of Cambodia?
So it runs by the National Bank of Cambodia, yes. So
wow.
We have YouTube video, 6 stories about saving, negotiating, asking questions, because a lot of people are intimidated in the rural area. When you walk into a microfinance office, some of you here, you're very well groomed, and there's nothing wrong about it. You're very groomed with your ties and so on. But the people from the village, the farmer walk into the office and you see these people, you get intimidated. And then these people in the nice ties and well groomed will tell you, okay, I'll give you a loan, it's going to be 25%. And I mean, as a farmer, you're like, okay, well, since you know best, I'm going to take it. So we encourage them to ask questions. So this video will have this theme. We also distribute cartoons book to children because we know in rural area people don't have access to all these channels. YouTube or social media. So we distribute cartoons, books to them, very colorful, and at the end of the stories, there's questions, and we want to make sure that they understand what they read earlier. So there's a couple of questions that they can answer. Now we move on to launch an app, which is called NBC EDU, where all the financial literacy material that we have we'll put into one app. We welcome private sector if there's any program to also put into this app. And so this is where we are at the moment in terms of financial literacy, and I think this is very important from the central bank, not just because of access to finance, but because for financial stability, one of our roles, and I always try to make a point to others, multilaterals, that we're doing this not because it's good to do it, we do it because it's our mandate to do it. And if you get people to understand their roles and their responsibility from both sides, the supply and the demand side, then we'll achieve better results.
Incredible. I think I'm beginning to be a fan of the progressive thinking in Cambodia, and I think I'm going to talk to the MAS about it as well, right? Erwin, you head FinTech for Bank Indonesia, a critical role. Many of us, maybe in this room, including myself, I've had an opportunity to work very closely with the Chief FinTech Officer of the Monetary Authority of Singapore, right? How does policy from your office begin to be the glue between what FinTechs in a market like Indonesia are doing with the opportunities and challenges that they should be solving?
Thank you for the question. Let me begin with the context of Indonesian economy. We have 265 million people across the country. You know, it's a big country with thousands of islands, right? And then we have around 60 million SMEs, right? But through the decades, they're always the SMEs, right? Based on this context, we'd like to see the economy growing, but it's really hard to grow because of the informality of the economy, right? The SMEs stays as SMEs, right? Then some time ago, we have what we call National Strategy of Financial Inclusion, right? So like many other countries in the world, we start with trying to make unbanked people, I think like the story in Cambodia, try to make unbanked people become banked people. But then today, the question is really how we go from here, right? Is it really matters that people now have an access to the financial inclusion? But they're still poor people. They're still SMEs, right? Then, fortunately, there's a big wave coming in, which is the FinTech industry. By the way, we have the FinTech Association in Indonesia, and according to them, there's around 200 startups, 200 FinTech in Indonesia, mostly in payment and deposit and insurance and so on and so forth. But here's the story. I think this is a good story of how we can go from the financial inclusion through the FinTech. We have a big story of, if you're familiar with Indonesia, there's a unicorn called Gojek, for example. Yep. If you go to Jakarta, it's really crowded cities, around 12 million people during the day. And if you go there during the morning and you go to the red light, for example, and you will see all those motorcycles with helmet with Gojek and Grabs, right? So suddenly there's a solution coming from the FinTech, right? Suddenly there's a lot more people, millions of people that used to have no work, but they have a motorbike, then they have work, and they have a steady income, right? So I think those stories really inspire us, right? So I think this is really important industry that will answer the very big question of Indonesian economy, right? How then we can to transform those informal sectors becoming the formal, and then go to the government, and then we have more space in fiscal and so on and so forth. So that's important. If you have a chance to go to the annual meeting last month in Bali, there's a very nice speech from our president. We're really proud of our president, President Jokowi. At the time, there was a launch of IMF World Bank's working paper on Bali FinTech agenda. I think I really recommend you guys to read this paper. It's really nice. So in the president's speech, he really make a good point of the importance of the regulator to not to stay away, but according to him, to have a light touch regulation to the FinTech industry. Because with all those innovations that they have, like the story of Gojek that I just mentioned, innovation should be there, and then probably they can answer the very big question of the economy, right? I agree with Sarai when she talked about at the beginning, we in the regulator have a tendency to regulate because we regulator, right? We regulate. That's what we are paid for, right? But this is different thing. This is different. We have to deal with innovation. But then again, if you read the paper of the IMF, the Bali FinTech agenda, the message was there. But it doesn't mean as a regulator we really have to stay away. That's really the question that we in the Bank Indonesia really contemplating right now, right? Beside the story or the hope of us for the FinTech industry, we also have a tragic experience during 90s when we have ASEAN crisis. Right? If you remember, early 90s, we opened up the banking systems, right? And then everybody really enthusiastic about it. World Bank, IMF said good things about the transformation of the financial industry in Indonesia during the early 90s. But it took only 8 years after all those development collapsed in 1998 when we have a biggest crisis in our history, right? So this traumatic experience really still in our mind. So Sherry mentioned it really clearly. That's the thing that we are now really contemplating. So in one sense, we're really enthusiastic about the development, but I think we also have to do our job as regulation to make sure that this development still be in our supervising on our side, and we still have a control to make them stable. Because sometimes when you talk about to the industry, especially to the young people, they're really afraid that we are the regulator, we will stop them. We will not stop them, but we just want to make sure that everything will be in control. So I think communication is then really important. But I think the main point that I would like to deliver in this very good opportunity is if you come to Indonesia, we welcome you. It's a good business, 265 million people, 60 SMEs, and the market is so big. The middle income group of the population is really enthusiastic about technology and so on and so forth. And this is the good time to come to the country. And by doing that, you will also help us in, again, answering the very problem of Indonesian economy. So win-win solution, I guess. I hope I answer your question.
Yeah, of course. Brad.
Could I just make a comment, particularly to the regulators? Firstly, to Madam Saray, I'm very glad you trusted me. So thank you very much, because I think that particular company now has really driven financial inclusion in Cambodia significantly. And I think it's also made Cambodia really, I think, one of the great success stories in ASEAN from a FinTech perspective. So, but to both the points that were made by the regulators, I think FinTechs need to realise they actually have a grave responsibility when they're dealing with people's money, and certainly even in the market I'm operating in now, some of my competitors don't necessarily always take that responsibility very seriously. And I think it's something that I think, because I've come from a banking background, a lot of other people have as well. You do realise that when you're dealing with people's money, and particularly people who aren't wealthy, poor people, that losing a payment or having a fraud can actually wipe out their savings. So I think it is very progressive for both regulators to be thinking like this, but there is a responsibility on all people in the FinTech industry to make sure that they apply the same standards.
Yeah, so Brad, let me pick on that. More recently, Myanmar seems to have prioritized mobile banking as a way to drive financial inclusion, and they've come up with lots of new frameworks around interoperability, KYC norms, etc. How important is interoperability to drive financial inclusion?
I think it's important, but it needs to be done at the right time. So we're building out a network now, and if we had to provide interoperability today, I think there's a disincentive for the providers to actually do a lot of that investment to begin with. But at the right time, I think interoperability is absolutely essential. And in fact, there's many different forms of interoperability. There's agent interoperability, there's account interoperability. One area where we're very actively working with the central bank in Myanmar is around digital payments interoperability. So I do think there's actually a big opportunity for that. And what the central bank in Myanmar is doing currently is creating a common QR code specification so that really an issuing and acquiring network can be laid out. So there's actually an incentive then for, say, a provider like us to roll out an acquiring network that other banks or fintechs can actually then use. So in short, if interoperability provides the right incentives for the providers to continue to invest, I think it's a very good thing, and it can be an accelerator, but it's got to be done in the right way.
Anthony, your comments on that question?
I tend to agree. So payment interoperability, we're benefiting from hugely because now money flows easily between the banks and the wallets. On QR, I think we need to do it in the right way. We need to do it in a way that actually drives the cost of inclusion down. And what I mean by that is sometimes we tend to get influenced by standards that exist in more banked markets, which may not be really applicable to markets like ours, where the cost of creating that network may actually turn out to be quite expensive for all players and may actually hamper growth, and it may send us a couple of steps back. For example, we've rolled out 28,000 merchants on QR in the last year, and we've been doing it at this point with zero MDR, merchant discount. And the moment you bring in a standard which is more bank-like, I think the cost will actually go up. So what we want to do is really drive low cost and efficiency. And we've been having dialogue with our regulator on that front. But as a principle, yes, we should all have it. It should just be done right at the right cost structure. And the motivation shouldn't be around the commercial benefits for the providers, but a larger view on what is it for the merchant or individual consumers.
Yeah. Madam Sirai, I want to ask you a question which is more related to ASEAN as just Cambodia. Is ASEAN like EU, and what sort of interoperability, not from a technology point of view, but from a regulation and harmonization of policies point of view, can ASEAN be? Should it become more of a one unit like the EU is? Can it become one like that?
Probably not in my lifetime, I would say. I think the EU has, at the EU level, has directives, and then every country would try to adopt and harmonize the rules and regulations, not just in the banking industry, but everything across the region. I think at the ASEAN level, we do have an initiative called the ASEAN Banking Integration Framework, we're trying to work on financial inclusion, harmonization as well, regulations, financial stabilities, and I think that's it. Yeah. So these are the things that we're trying to work on. It has taken a lot of time, and I mean, you can imagine harmonizing regulations for bank, which is an industry that we think we know, is taking this much time. So imagine harmonizing regulation for the FinTech industry, which we are pretty sure that we don't know enough. So it's going to take even longer. So it could happen, but I think the initiative of AFIN, it's a very good platform to start with, and I think the private sector do play an important role. It doesn't have to be everything government-driven, and the government set the rules and you follow. I think the private sector need to step up the effort and drive that harmonization across the region as well.
Yeah, okay. No, thanks for the plug on AFIN. It's very helpful. But are there any questions from... Oh, okay. Which one should we pick? Right. I'll pick the second one. The first one I think we've taken care of, and maybe we just have time for one. It says, how much trust factor plays with the fintech firms who deal with the unbanked sector in terms of safekeeping of hard-earned money in wallets? This is a pretty good question. Yeah?
Sure.
Brad, Anthony, you want to take a shot? No, go ahead, please. Maybe let's keep it brief so we can just go around on the same question.
Sure. I think it makes a huge difference. Anywhere where there's a store of value, it's important, which is why we try and write off the brands that consumers trust, which is why it doesn't have to be a bank. A bank helps, but an institution that the larger population trusts, like a telco or even a conglomerate, can be very useful.
Okay. Brad?
I think it's got everything to do with it. So it's very hard to earn trust. We've invested a lot in brand, we've invested in call centres, we've invested in systems to earn that trust, but we've already seen how quickly we can lose it. So if we have an IT issue, for example, our Facebook messenger just explodes, and we get called all sorts of nasty names because it's really an impact on trust. So it's everything. It's something we take extremely seriously.
Nice, right.
Trust is a big word, and we're working on it, bringing back confidence into the system. So it takes time, I think, Yeah, that's not easy thing. Even between two person, we don't trust each other. I mean, the longer we stay with each other, then the less trust we have on each other. So, I don't know.
Okay. Erwin.
That's the very basic point of payment industry, right? This is all about trust. We talk about banks, payment, and all that. Today in Bank Indonesia, we really work hard to rewrite actually the blueprint of our payment system, especially on the retail sector. It's developed really fast. It just mentioned just now, but we, as a regulator, we really have to make sure that everything's should be in the safe manner. So that's why again we try to rewrite all those. We call it blueprint for payment system. So hopefully in the coming months we will come up with this blueprint to make sure that trust is there and people will have a convenient using all those innovation in industry.
Brilliant. Well, please join me in thanking the panel here. We're out of time. Anthony, Brad, Madam Sirai, and Erwin, thank you very much for your time.